right, so welcome once again. So I think we are discussing here the weekly events in this call from a macro perspective, especially what's going on in the markets and how do we interpret it, how do we make a plan around it. So let's get going. I think there were some interesting questions at the start of the call about what's going on with tech rotation, what is going on with the gold rally, and in general, all the various aspects. So let's, as usual, we will just open the chart and see if we can try to answer a few questions in a more, easier manner. So first of all, as usual, we do SPX discussion. So one interesting thing is we basically came back within 2 points of last week close, like where the last week Friday the markets closed, which is very interesting given that we had a huge move, which was of course driven by the Greenland related tariff which Trump had announced over the weekend, and market opened down and crashed almost. I would call it. It was a pretty big drop from a 1 day perspective. And as we always say, it's a taco trade, as the market loves to call it, where Trump always, this is his playbook, which everybody has understood now. As soon as he pulled that back, we got it back. So again, another small V-shaped recovery, small down, but the structurally, I think, if you remember, this is a channel we were tracking. Structurally, we were broken, and as you can see, while recovering, we came back exactly from that channel, which was broken. Even though we are, as I discussed just now, that we are within 2 points of last week close. But in a technical analysis term, we are looking weaker than last week just because we broke out of the channel. Even the recovery did not follow through and break back into this channel. Again, this is zoomed in version. We usually start with a much bigger picture. So nothing has changed from a big picture. So I'm not suggesting this is anything to worry about. I'm just showing you the raw short term. So again, this is our usual daily chart. And if you see from here, we have still made a higher low. It's not like we are in a big downtrend. I just wanted to start with a closer picture because I wanted to give a different perspective of that market are weak. Market are not necessarily, even though this was a V-shaped recovery and this is which happened within 2 days, it was not as like we are making a new high. And the reason being, we're still waiting for justifying this valuation. We're still waiting for earnings. The major earnings are coming next week, starting next week, and leading into another week from there. I would say next 2 weeks are going to be very, very critical because ultimately the SPX or most of the market is built of tech stocks. Usually these 2 weeks where hyperscalers start declaring earnings, these become critical. And I think the week after next is even bigger in terms of the earnings season. So that is, I would say, all we can say. On the other hand, we did see that as compared to last close on Nasdaq, we again very similar, another very very close to last week close. On the other hand, yeah, Nasdaq did try to break out into the channel again. So tech was slightly stronger than usual. We saw the correction bigger in even today. We saw a big correction in wider indices. So this was unique, I would say. Today was one example where we saw the divergence again, where small cap, which were rallying non-stop, which had actually made a new high even after the V-shaped recovery. They gave up most of the gains. Again, this is very unique. I think very different from what has been happening since we started seeing the wider indices rallying. So overall, yes, I think again market is in a wait and watch mode. Today, the Nasdaq turned positive while the wider indices went down. On the other hand, SPX as a bigger index, we are flat. So what tells me again is a rotation story. Nasdaq had become cheaper. We did see some of the stocks which had suffered a lot, and we had been talking about them, like Microsoft, which had a huge day today. And this is, I think, again because of the earnings. So the earnings are coming next week. Market is understanding that the pessimism on Microsoft probably is too much because we are down from 550 to all the way to 440, which is, I don't think Microsoft has ever seen such big corrections recently. And it's a big cap. Similarly, I think we have seen the other large caps sitting on support, like Apple and so on, which is it's an expanding channel, but it's still a channel, and we are seeing that a lot of these stocks have potential to bounce back just because they're oversold. Not necessarily, even if they bounce back 10% from here, it doesn't break their downtrend because they have already made pretty deep corrections when you talk about Microsoft of the world, Apple of the world. Similarly, we saw the same thing in Meta. which it had corrected a lot, and it is jumping up because the earnings are due. So I would call this more of a bottom chasing rather than a change in trend. And real trend will establish once we see the earnings, when we see the moves, and so on. So that is where tech is. I think tech is definitely driving a lot of the story. I think the bigger picture, let's go back to the macro. So what happened here was why Trump had to get back from his tariff stance was the biggest understanding for me is stock market is, of course, almost irrelevant from a policy perspective. But I think what we saw after the weekend tariff, and especially on Tuesday, we broke out on the 10-year yield from the 200 moving average, and we actually are threatening the last resistance on that. So if you remember this, I have been tracking all last year. I have not changed these lines. These are the three slopes I was tracking. So as we saw towards the end of the year, we had broken the steepest slope. We were still holding below this trend line, which was started in May of 2025. Now we almost touched, and we were threatening the trend line, which is from the peak yield all the way back to Trump inauguration. So yes, this is a risk to the market, and not just risk to the market, but overall policy making, because it's a stated policy by Trump administration. They want to keep the 10-year low. That is their model of saying why we are bringing the costs down for the markets, as well as for example, mortgages and so on. And in election year, I think this will be very closely watched, and we will discuss a lot more about these kind of things in the event of why these things matter and how they correlate with the market. But in general, I would say this is definitely going to be something which one question before the call started, when we started recording, was what is the concern of a Trump administration? What would they worry about? I would say this is the biggest factor. If it starts breaking out above 4.3, maybe it's still not panic, but definitely will worry them. But if it goes anywhere close to 4.5, I think that's when market really panics. That's where I think we will see a lot more damage to the market in general. Now, what is the story otherwise? So we are still seeing geopolitically, gold is still driving like the move up. We are continuously making new highs. We touched almost $5,000. Silver has actually broke out of $100. And as we have been discussing in the WhatsApp group and otherwise, um, definitely there is a trend which we have been tracking. And if you are with us last 2 3 years, we have been talking about it, that this is going to happen. But also we need to recognize, and we have been talking about it repeatedly, that this is not normal what is happening in last few days. There are all kind of signs. Means you can of course see it in the chart. It's very clear what kind of moves you are seeing right now, especially in gold. You will see that we did have a rally before, and it's very easy to see how this chart is looking versus how this chart is looking, the last portion. So this is what we call the exponential moves, and this is what cannot be justified by either sovereign buying or anything. This is what we call hot money chasing, the last end of the rally, where now it's not fundamentals anymore. Now you cannot take a position saying that gold is in a bull market, because even if we draw this line, the typical trend lines, which is very steep, by the way, it's way steeper than what we have been tracking as a channel where we had been investing. If you remember, our bullish call was like, if you're all access member, we were bullish on gold in March of 2024. Now, this is what we call as a normal long-term trend. What we're seeing right now, this was again, while we were maintaining, we broke out of this channel, but we were still maintaining an uptrend, which was correcting from time to time. And this is what we saw even in October last year, that once you can have almost a 10% correction, or maybe more than 10% correction, when you go exponential. So we are basically in this very similar move which we saw in October last year. And it's very of course, nobody knows what's the top. Nobody knows where it corrects from. Definitely $5,000 and silver $100 are great psychological marks, which a lot of people were watching. So it can happen. But as we saw last time, like 4,000 was supposed to be a correction point, but we went all the way to 4,300. So nobody can tell you what's where the correction will start. But when it does, as recent at what we saw, like we had seen huge moves, like $200 $300 move down, and sometimes 5 to 8% or 10% down moves. So this is what you have to just worry about if you are an investor in gold and silver right now. All I'm trying to highlight here is that earlier it was where we were tracking this trend. It was more about the geopolitical impact. Right now, it's paper money chasing speculative returns. Even if we go back to 4,400, we will still be in a very steep uptrend. Even if we go down to 3,700, which is a huge correction, we will still be above. We call it as a reverse to the mean and still in an uptrend. It will still be a consolidation from a technical perspective. So trading has to be kept in this bigger picture mindset if you are investor in gold and silver. So this is where I think we are worried. We don't believe in chasing the tail end of risky returns. And this is where, if you are part of our solutions, you will see that we are either hedged or we are reducing positions here. And this is where we call people to be very careful. Now, having said that, when gold is very similar to where I would say Bitcoin was last year, right? So we had this everything going up. We had some really big, fast moves in the end, and we saw these kind of corrections. So this is money rotating into it. I think, as we discussed last few couple of weeks, that Bitcoin is kind of forming kind of a upward channel, but it's struggling. Like every time it goes up, there is always some selling coming in. But I think we don't have to discuss too much because we already talked about what are the factors it's impacting. I think most of it is because of the gold and silver becoming the hot money, because I think there was this whole pressure on digital asset treasuries. I think that is still continuing. I think we are seeing those conditions improving greatly, but I think the focus right now has shifted to gold and silver. And gold and silver are gold definitely is becoming a little bit of a systematic issue. I think silver has even more volatility, and the corrections can be even bigger. But I think overall we have to watch out if there is any kind of liquidations in in the shorts or even the paper money. This can create a correction in the market. While we all know that market is struggling, like market is not able to make new highs. Market is still within 2 points of last week, even though we had all these rotation coming into different stocks. Now, what is the upside? The upside is, as we talked about Nasdaq. I think this is where we everybody's waiting for earnings. Everything can change next week or in next 2 weeks as the earnings come in, and we can say, you know what, earnings justify all these valuations, and these are probably cheap. That's what has been happening for last 2 or 3 years. What is happening is we always go to the peak of the valuations, then there's always the earning surprise, which is positive, and market resets its expectation of the how the AI trend is going. Now, the news on that is kind of mixed. Again, I think some people are talking about how the AI is getting, the spending is probably going to slow down. There's a lot of pressure on tech companies to reduce spending this year, and it's always something which we watch with a lot of interest as the hyperscalers start talking about their spending. So if you see, earnings will have much less impact on what they are talking about in terms of how much money they made. I think a lot more questions will be asked in earning calls about how much capex they are planning in the new year and as we go along in the next couple of years, if there is any update to that plan. So that will be interesting to see now. And I think that's where the market is heading towards now. I think most of the wait and watch mode is there. And as I said, the 10-year yield, everybody has to watch, because remember, as these yields rise, the cost of the capital is increasing. And cost of the capital cannot increase too much in the environment where even the AI spending is now moving towards more debt-based funding rather than the free cash flow based funding. So all these various factors we have to look into when we uh, think about where the market can go from here. So this is some of the things I wanted to talk about. Before we take into the questions, I just wanted to remind that we have updated a lot more things in the agenda for the event. So if you're planning to come next weekend, we've added, I think, based on the feedback from some of the multiple the participants who have been coming to our events, we have added another session on options workshop. This time we're going to talk about how to use which kind of strategies in different market scenarios. Of course, we have the macro sessions and the geopolitics and other policy risks. And we have we will talk about gold and silver, the Bitcoin, how they are looking like right now. And which was a very successful last time. We did a very good roundtables and kind of discussions between the investors. We are adding some more sessions around that, in where we will try to create a mental model of how to invest and how to think about and change a behavioral change in your investing pattern, which can help you. That is the goal of the event. So just wanted to make sure that you are able to see through the agenda. If you are looking for more information, we have been taking the feedback and improving all the contents around that. So I will take some questions here. Let me see if anybody has anything in the chat. And I think we did have a few questions from earlier. Let me see if we tried to answer that. I think one of the questions was earlier was that whether the gold linked with global geopolitics, why would it slow down? I think I tried to answer that during when we reviewed that. Yes, the trend will be up, but it doesn't mean that it cannot go down to $4,000, and it will still be an uptrend from a macro trend perspective, from geopolitical perspective. I think the change which we are seeing right now is that there is, and it's not just this. I think we have a lot more data coming in. I'm not able to show those things like when we syndicate feeds from some of the risk. But we can clearly see that the current investment in last few days is very heavily driven by speculative money and not because of underlying gold strength, which we were always seeing. So that's the only difference I would say, which we are seeing in the data. Then let's look at the other questions around the US GDP. So I think this is something, whether it's growing at 5.4%, I think there are a lot of different factors which control GDP numbers. As you know, that last year also there was a lot of big jump and big drop in GDP because imports try to preempt the tariffs and so on. And there are a lot of other factors I have to look into before I can comment. And this is the kind of data which we also are going to go through in the event. But basic idea here is that definitely US growth is very high right now. The reason being very simple that most of the spending which is going into the whole AI framework, uh, there's a lot of heavy investment which has come in, especially with the kind of deals that Trump has done in last 1 year with most of the countries when they were signing all these trade deals. That included heavy amount of investments which have to be followed through. So the purpose of this whole trade wars and drama was to force the world into picking a side between US or China, because ultimately we are living in a very much developing bipolar world now. We did talk about it in one of the events last year. I think we are going to double click this year when we talk about geopolitics as continuing the story of where we are today. And that is where I think we need to think about. Right now, US GDP growth is definitely high because we are almost entering into this so-called bipolar war-like scenario, you can call it. In modern days, we don't get into actual wars, and US can never get into that because there is no threat actually near US. But I think this is the best you can get in terms of wartime spending. So this is where we are seeing very heavily into kind of whether it's bringing manufacturing back and trying to enable Intel with a lot of investment, whether trying to bring TSMC here and so on. And then you have this whole data center race between hyperscalers to own more and more compute power. So if you don't see the GDP boom right now, then when else, like what else would you need to do that, right? So we are talking about, I did share, I think from our team, we did share some of the estimates of productivity increase which AI can provide. So we need to recognize the fact that whether we believe it or not, uh, AI is expected to deliver huge performance improvements and huge productivity increase, and that is becoming the consensus. And leading up to that, all the spending, it will have an impact. It will have a trickle down effect on the wider economy, and that's what we are seeing in last few years. And now that we are going into a easier money environment, definitely the growth can be sustained. Um, but the question to ask is whether market is, there are two parts. One is GDP growth is there or not. I believe it is there. Now, I don't want to debate on the 5% number versus 3% or 2% number. But then I think the other question to ask is what all is priced into the market and what is not priced into the market. And I think that's the discussion to be had. I think that will need a lot more double clicking. But overall, this was one of the golden period which we will remember if once it's over. Means I don't believe it is over, but definitely we are much in the much later stages than where we were last year or 2 years ago when we talk about the whole new spending and AI boom. Now what we are waiting for is actual delivery of results. Means if the results show as promising as what everybody believes, we can continue and we can have a super cycle of productivity increase and so on. And some areas are showing progress for sure. Like if you look at the software development, if you look at the self-driving cars, if you look at some of the progress happening in robotics, all those things are going to be closely watched for productivity increase. And GDP numbers can stay high for US because this is the only place, and we did talk about it in last event, and we are going to share more data on that. This is the only place in the world where the most investment is happening in these cutting edge things other than China. And the world is becoming China versus US anyway. So you will not find anybody else having the ability to invest other than these two places. But again, this is all very interesting discussion. I would say I would love to uh, show some more data before we can talk about these things, because that's what when you look think big picture investing, that's would really um, important to understand what is driving some of these factors. And our goal is to always go into those when we sit and go through these kind of presentations when we do in macro discussions in Investor Day. So let's leave it there, and we can continue this topic there. Any other question, guys? I think I would like to keep it short. So probably today there are certain commitments. So let's take a couple more questions and we can call it a day. Anybody has anything else going in the mind? I think heading into earnings, would love to discuss that. I'm sure last few times we did discuss about memory. If you guys are watching, we have seen how the stocks have gone up in that area. We have seen how gold and silver. So you can see clearly markets lack of imagination sometimes when they are chasing a certain, hot money chasing a trend, we call it. And some of these things are definitely going way more exponential than what you would like to see in a more healthy trends. And that's what I think should worry everybody in terms of when you are picking these investments. And because sometimes I know that it will feel like you're missing returns sometimes, but you can also imagine that whatever goes up so fast, that is not going to be stable investors. Like they're going to be hot money, which can pull the plug very quickly also, the way they blow up the prices. So that is, I think, anything which is go like after a healthy trend, when it starts going exponential, you have to be a little careful. And it's always okay to leave out a little money on the table and be a little more comfortable in how you invest than to feel like that you have to get the every dollar out of your investment. That is one thing which we always talk about, the mental models. And I would just remind everybody that don't feel like you missed out. Means it's not important that if some certain assets went up 3 or 4x, if you came out in your trade in 2x, that's a great return. And the market will always be there. As long as you're alive, there will be something trading. There will be some opportunities which you can always find at the right time, where you can sleep well and you can make sure that you are not chasing something which tomorrow can drop 20% and you will not be able to control it. So if you make investments in these kind of things, make sure that you are hedged, because right now I know a lot of commentary and the analysts, or whatever you see on TV, their job is to make sure that they talk about those assets which are going up because that's the news of the day. And they tend to blow up these things as if today something happened and gold went up 5% or silver went up 10%, and something changed today. Nothing changed today. We have been talking about this. What are the factors why these things are going up for last 2 years? It's not something which happened today. What happened today is that this trade has become the favorite trade of almost every speculator, and that's not a good news. Whatever be the fundamentals, when every speculator is chasing the same story, that's when you as a investor should always know that that becomes a gamble. So that's all I would like to highlight today. When I keep getting these messages around gold and silver, I keep getting the messages about stocks like Micron and SanDisk in my personal mailbox. And I tend to not, means again, I'm not supposed to advise on individual stocks to individual people, but I always tell people that, you have to worry about, means whether you are comfortable that it's a gamble at this stage of the cycle, then you can take it. But other than that, fundamentals cannot define what is happening in any of these stocks or in any of these assets. All right. So I don't see any other questions. So you can feel free to unmute yourself, or you can type in the chat if you have any. Otherwise, I think let me just quickly see if we had added any other agenda items. We did talk about precious metal. We did talk about the agenda of the event. And I think markets, as I said, we are in a wait and watch mode, to be frank, at a broad picture level. The summary is that without earnings, I don't see any major directional move in terms of where the tech is going. Because if you see since last earnings, most of the stock which picked up a certain trend, they have not reversed or they have not changed direction. Either they are just moving sideways, or if they started correcting, they were just correcting. So that is where I think it will be very interesting next 2 weeks, and we will be definitely discussing more and more about that in various channels where we are discussing these stocks. All right, so I think nothing else here. So next weekend, as I remind, just a reminder. So if you're not yet registered for the event, feel free to do that. We may not have this call next week because of the event on the Sunday. So we will skip that and directly go in second week of February after all the earnings are out. That will be the discussion next when we meet on the Zoom call. So thanks everybody and have a great weekend, and see you in the on next Sunday in Investor Day. Bye.